What's going on, guys? Welcome to the Finance Basement. I'm your host, Kevin Ruiz, and today I'm officially starting the first episode of the Finance Basement podcast. Something I've been wanting to do for such a long time now, but I'm only now getting around to it. Without further ado, today I wanted to talk a little bit about the coronavirus and the panic and what effect it's having on the mortgage industry, my job on an everyday basis. As you may very well know, the coronavirus has had a large impact on industries across the globe. So I just kind of wanted to talk about it a little bit. We'll start with the interest rate. The interest rate today, as of March 23rd, is 3.97%, and as of last Friday, it was 4.05%. Right. So for those of you that don't know, an interest rate is made up of two different rates. The first one is the benchmark or index rate, which is basically the current state of the world economy, the world markets. And the second rate is the margin rate, which is what lenders charge on top of the benchmark to make their profit, to do business, obviously. So if the benchmark rate is 2 and the margin rate is 2, then you have a 4% interest rate, which is basically around what we're at right now. So interest rates have been slowly increasing as of this year, as of the beginning of this year, because of the all-time low interest rates that we were having, right? Lenders were receiving a surge of applications due to this, especially refinances, because there were a lot of borrowers looking to lower their interest rate. We had all-time low interest rates again. What has happened now? Lenders don't have enough manpower to back up or to work these surge of applications, and I'm talking it was a large surge, somewhere upwards of 76% increase as of the same time last year in loan applications. So that's a really large increase, and it puts a strain on lenders. So what did lenders do to combat this? They increased their margin so that people would back off of the applications and they would have more time to work the applications that they had. This isn't going to last forever. As soon as lenders get a hold on this, the interest rates will start to decrease. I mean, they're already decreasing a little bit now. Who knows if they're going to decrease even more in the coming days. The market's pretty volatile right now because of the coronavirus. So it's all really speculation right now. My assumption is that in the coming days, the interest rates will drop, and maybe in the coming weeks and months, it might drop to another all-time low. But that's just my opinion. Right. The next thing I want to talk about is the Fed fund rate. So many of you may know that Trump announced that he was cutting the Fed fund rate to near 0%, and that already happened. The Fed fund rate is basically the rate at which banks borrow money from each other. It doesn't directly affect the margin or the benchmark rate of an interest rate, but the news can decrease interest rates indirectly because they directly stimulate the economy, which therefore the news can basically bring the margin down or the benchmark down. So that is why interest rates basically aren't going down immediately, because the Fed funds rate doesn't have anything directly to do with interest rates. Now, the next important thing is that the Federal Housing and Finance Agency has announced they ordered a suspension of foreclosures from the HUD, Fannie Mae, and Freddie Mac, and in doing so have also suspended evictions due to mortgage issues. Now, this is a big one because a lot of people are losing their jobs, their income is being curtailed, so there's not really any money coming in. So how are they going to pay rent? How are they going to pay their mortgage? So backstopping this is going to really help those that are in need of a little bit of time to get their things together or wait out until the panic dies down a little bit. So the last thing I wanted to talk about is home prices. A lot of people have had the opinion that home prices are going to fall due to the panic and coronavirus, because everything else is falling. And maybe a little bit, they might a little bit, but it's all speculation because the markets are falling due to the panic of a coronavirus, right? We don't have a full-blown real estate bubble like we did in 2008. So there's nothing really directly affecting real estate prices for them to go down. Could they go down? Maybe they could, but will they for sure 100% go down? If someone tells you that it's for sure 100% going down, they're lying to you because they do not know that. It is speculation. There's nothing taking away from the value of real estate currently. And that is everything that I wanted to talk to you guys about today on this short episode. It's the first Finance Basement episode. Don't forget, if you have any questions about the home buying process, interest rates, or the current state of the mortgage industry, please email me at kevin@thefinancebasement.com. You can find me on Instagram at tfbasement. You can shoot me a DM. You can email me, whatever the case may be, and I will answer your questions when I read them.